All right. I hope you guys are doing well because today we're going to talk about prop firm evaluations. We're going to talk about how to pass them quickly, and just overall how I go about passing them. And it's going to be very much worth your time. So, the reason why I'm making this video today is I actually passed an evaluation this morning, and I already have a stack of accounts that I use, but I want to get a little bit more allocation, and I'm setting up my trade copier. I want to use Project X as the platform that I execute on, and so I need a Top Step account as my leader account. So yesterday I bought a 50K eval from Top Step. It's the 3K profit target, 2K drawdown, but they have that consistency rule where it's 50%, so you can only make half of that profit target per day. So it's a minimum of 2 days to pass, but I passed it in less than 24 hours. So we're going to talk about how I did that. And the way that I did that was yesterday, I ended up taking a trade before market closed around noon. And then this morning, I took a trade around 10 or so and passed it like that. Because when the market closes and then reopens at 6, it's a new day. So I could take a trade at 3:30 in the afternoon yesterday, but then the market reopens at 6. So at 6 o'clock, then I'm back to zero. So that works for the consistency rule. And here's the activate my account email that I got this morning. So there's that. But let's go over the trades that I took. Now, bear with me for a moment. This is the first trade. And let's be for real for a second. Let's be so for real. When you look at this trade, does this scream to you that it's a quality trade? I'm asking. I'm asking. I would hope your answer is this is not a good trade at all, because it's not. This trade is fucking terrible. Now, it did end up getting the 1500. It hit my take profit for the first half of the profit target. But this is one of those trades where it's like, let's say you haven't gotten any action recently and you've been in a bit of a drought when it comes to the ladies, and then you end up fucking some chick, but she's not really up to par with your usual standard, we'll say. Like, you got the job done, but it wasn't pretty. And that's sort of that's how this trade was. So there was a little bit of context behind it, so we'll go over that real quick, and I'll go into replay mode. So on the 1 hour chart, so yesterday after the morning session, what we kind of did in the morning is price comes down and we sweep out. Like, we've been respecting this 1 hour gap right here, and price has been in a bit of an uptrend, and we respected this 1 hour gap. And in the morning, price comes down, sweeps out this low, and then we start to make our way higher. And I have what I consider to be a pretty good draw right here. So if we want to sweep this low, keep respecting this gap and go higher, we should take this draw on liquidity. But instead, what price does is we took out this low and then we just swept the internal high. We did not displace through it. And my number one rule with trading is if we don't displace through the first draw, you can't target the second draw, because we could just sweep it and go lower. That is exactly what happened here. We swept it, we started to go lower, and after the morning session around 11:30 or so, I took a peek at the charts because I knew I had the evaluation. I knew I'm just looking for something decent, and I noticed that after we tried to displace through that draw several times, price couldn't do it, and then we were starting to trend lower. So what I do with evals, the first trade that I take, if it takes 2 trades to pass, which a lot of them do, the first trade is going to be not that great. Okay, it's going to be, do I have a sense of direction and price? Can I get an entry where I shouldn't get stopped out with a reasonable size? And I'm slapping it. Okay, I'm just making sure the odds are a little bit in my favor, and I'm taking my chances because I'm trying to pass these quickly. Okay. On the second trade, I take it a lot more serious, but we'll get into that in a minute. So what I saw with this trade is I was looking on the 5-minute chart, and once again, this is not an A+ setup by any means. I know it's dog shit, but I still want to give you the context, what I was thinking. I saw that price formed this 5-minute bullish gap, and really the idea was if price looks like it wants to cut through this 5-minute bullish gap, we're probably going to go lower, maybe take out this low, maybe just start trending low. I have no idea. But more than likely, we're probably going to trend lower before we trend higher. And so price kind of dancing around in this gap. And then it was actually, I took my entry on the 1 minute time frame. And I just kind of, I said, hey, I see a big, where is it? I remember, yeah. So we had this big fat 1 minute bullish gap. And I said, you know what? If price comes up and then we come back down, disrespect this 1 minute gap and close, then I'll enter the trade. And I'll set my stop at a reasonable point. And I think, I have to go to replay. I think I went in with 15 contracts, if I'm not mistaken, I believe. Yeah, okay. And as you can see here, I'm risking the whole account. If you've been watching my videos, if you've watched any of my eval videos, you know that when I trade these, I'm risking the full drawdown for the take profit. Like that's how I go about them. Because think about it. It's a negative RR trade. If you can't hit 2 negative RR trades in a row, you probably shouldn't even get on the funded account in the first place. And you're going to blow these sometimes, that's fine. But more times than not, if you have a direction in price that you're confident in, you're probably going to pass. So I took my entry here, and as you can see, I was a micro penis length away from this failing, okay? I was literally, I don't know, I wasn't sitting at the chart because I just left this thing running. I was probably down 1980 or so on this. It was close, but it ended up holding, coming back, and it hit my take profit. But I wasn't even at my computer, so there's no way for me to even manage this if I wanted to. Now, even if I was at my computer, I wouldn't have managed this because the way that I pass evals and how I've consistently done it over a long period of time is by doing it like this. Most people just don't have the balls to hold through all this drawdown because maybe they're on their last $100 in their bank account. And if that's the case, do not do it this way. Take them more seriously. Do it the right way. But if it's not going to hurt you to lose a couple $100 and you know that when you get on a funded account, you know that you can get payouts and do it the right way, then this is not a bad method. It's worked for me very well. I'm not going to hurl up in a ball and cry if I lose $100. Like it is what it is. I'll try it again. So price comes all the way up, barely keeps me in this trade. And when I walked back to my computer, we were around this area. I was shocked that I didn't get stopped. And then it just ended up flushing to my TP. So that was trade number 1. Awesome. Great. Now, trade number 2, I take it a little bit more seriously because now if I blow this, then I have to hit 2 trades in a row again. Versus if I just hit this trade, then I pass and that's that. So for trade number 2, I'm looking for a confident draw in liquidity. I'm looking for good volume and price. And can I get a safe entry towards that draw? That is all I am looking for. And I'm doing the same thing. I am risking pretty much the whole account. Like I'm risking most of the draw, if not all of it. It just depends on the trade. Depends on how it looks. So today, this morning, I noticed that going into, clear that off the chart, going into market open, I saw that we had come down pre-market and we swept out this low, and now we were displacing higher. And so the only logical thing to predict is that we're probably going to go take out this really good draw. However, what I also noticed is today was non-farm payroll. So that 8:30 news, when it looks obvious on the chart, the high and low of that candle is going to be a very strong draw in liquidity. It's a magnet for price. In this case, the high of this candle was already taken. This is how you mark it. You literally, right at the 8:30 candle, mark the low, mark the high. In this case, the high is already taken pre-market. Usually one of the other is going to be taken. And a lot of the times, price will deliver to either the high or low, whichever one's not taken, even if your bias is very strong in the other direction. So I was cautious going into today because I had a good bullish bias, but data low is also a very strong magnet for price. Now, in the morning, I was about to take longs here. On this, I saw that price had, let me go in replay mode again. I saw that price came down into this 5-minute gap. We started displacing up. And if we had a solid 5-minute close up here, I probably would have hopped in along. The reason I didn't is because, first of all, this first 5 minute gap that we had, this 5 minute bullish gap, that got invalidated quickly. So we completely closed through that gap. And also, 9:30 open, instead of just delivering to this draw up here, we just came up, we swept the high, and then started displacing lower. So two signs that are not very good for a bullish bias. So with having data lows, knowing how strong the draw it is, I was curious if we were going to flip lower. And if we wanted to pump to this high, I would have just sat out, and it is what it is. Now, when I saw it was here, when we completely failed this move to go higher, this is like a textbook continuation pattern trade. When we failed this and then price started coming down here, I noticed on ES, which is actually the asset that I took the trade on, I noticed on ES that price was more bearish. So ES was the weaker asset. And I'm always looking to take the trade on the weaker asset. It makes the most logical sense. So it was on this candle right here. I saw this form on NQ. I saw it even weaker on ES. And at this point, with us not taking that draw, failing the continuation trade higher, and then having pretty obvious weak signs in price, I was willing to bet that with how strong data low is, that's where price wanted to go. So that is the trade I ended up taking. Like I said, I took it on ES, and there was not a single hair of drawdown this whole time, which was fantastic. And that is what happens when you have a confident direction in price, you have a confident draw in liquidity, you have volume, and you have confirmation that we do not want to go in the opposite direction of your draw. That's all I'm looking for with evals. The second you start managing your position and start exiting trades early, start going break-even soup early, this strategy does not work, by the way. It does not work. But as always, I have access to join my free Discord. That's going to be in the description of this video. I post my buys every single day. I post exactly what I'm looking for. I'll commentate throughout market open just to give you an insight of what I'm seeing. I review your guys' trades, and there's a lot of people in there that are pretty knowledgeable. So super helpful community to be a part of, and it's completely free. So join up, and I will see you guys in the next video. Peace.